Hello, CCI. We are live here with one of my really good friends, Amateo. Amateo is the CEO of the Crypto Virtual Summit and one of the lead marketing directors over at Ethos. Amateo is hands down one of my favorite guys to chat, to riff with in the crypto sphere. He's super easygoing guy, really personable. I'm just super excited to have you here, Amateo, and to have a nice back and forth little fireside chat. Thanks for stopping by.
Awesome. My pleasure. I mean, I just love this community. As far as Facebook communities go, aside from the one I manage, I spend the most time in yours. I get so much value out of it. And I just love all the people who've come together and the engaging discussions. And, I know that we're going to be live streaming to the group. So if people have questions, throw them in there. And I think we've got some talking points we're going to jam on today too. Thanks for having me, Jeff. You rock, brother.
Thanks, man. Yeah. So definitely some really awesome talking points to have recently, like some major things happening in the market, not only just with the price volatility, but with what's going on with EOS and, like the little hack that they had today or yesterday in their supposed fix. I think it's just absolutely nuts. Like,
it really is.
On the side of the price volatility, what's your game plan? What's your action right now? I know we talked
as far as market goes.
Yeah.
Yeah. Buy more while it's low. That's really it. I've got still a lot locked up. I hodl a portion and I'll swing or go fiat or cash out or hedge when I feel like the market's teetering bare. But to be honest, this is about I'm coming into my first year in crypto. And so the thing that have you ever seen those like Dunbar scales with like competence and confidence? Let's just say this last year I've been really getting my competence up to speed. I always say that crypto's been one of the most expensive and most profitable endeavors I've ever undertaken.
Yeah. That's the thing, like you get in at the first and you're like, oh, this is so easy. Swing trading, people, you can make just like $1,000 on that trade, $1,000 on this trade. And it's like you win $1,000 3 times, then get hammered for like 10 once. And you're like, oh my God. It's kind of like a little game in the casino. It is tough to time these swings. That is for damn sure. I know a lot of people.
Well, I mean, with all these Bart Simpson patterns people have been saying, I don't know if you've seen that, but it's like these dramatic uptakes in volume and these dramatic downtakes in volume. And, for me, the life of trying to really use that volatility to my advantage, so I kind of timed it out. So I was like, let me see if I can use this volatility to my advantage and make it hyper profitable. Was I able to make it profitable? Yes. But was the time and energy and stress utilized to make that profitable worth what I can use that time for to generate more fiat to keep stacking up and or more crypto even. Right now I'm working with Ethos, so I get paid in crypto. I kind of live and breathe crypto these days, considering I have a salary and like the whole thing, But for me, I just realized that like the benefit of just putting all the energy into the volatility wasn't quite worth it for me. So, the strategy for these kinds of market conditions is whatever I'm holding on to, I'm just going to see it through, even if it takes 4 to 6 months to get through this. I think that it's just going to be another one of those moments where we blink and we're in another ridiculous bull trend and you can't believe it snuck up on us so fast. And the other thing is that due to this severe volatility, I honestly haven't been able to understand the psychological cycle. Like, I feel like we might be going right into depression, or we might be stepping into disbelief and or on the other side of disbelief. And so that's something that I'm trying to gauge right now myself.
Yeah. And when you do stack it over top of that, like that classic market cycle chart, it doesn't really quite look like we've hit that absolute despair yet. I think the despair level, we're looking at around like 5,000 for a Bitcoin. People are still like, when we're getting, a 4% bull run like we're seeing today, people are still super confident. They're like, oh, it's back. We're back, baby. Like, here we go to the stars. And, if you're looking at classic market cycles, it doesn't just ricochet right off the bottom and head back up. A lot of these things are that slow parabolic curve. So, like you say, like that 4-month blink, I think is but very, very potentially. I don't know if this is going to be rebounding anytime soon. You know, it hurts me to say as an optimist and someone who doesn't short the market, but
same. I don't
shorting the market in crypto is just like, you know, in a time like this, I feel like it would make a lot of sense on one hand, because it's like I'm fairly certain it's going to keep going down, but you know, anything could happen where crypto just has this like kind of quick catch by some institution or some government, and it just rockets up, you know, easily 100, 200, 300%, and you're just liquidated on your short. So for that reason alone, just because all it takes is one hint of like fantastic news, and you just liquidated your whole position.
Well, and that's just it, right? I don't think I've ever seen so much layered and stacked positive press for everything crypto and blockchain related, and not seen the market have the ability to really react to all of that positivity. So I think what's been happening right now is we've got kind of a bottleneck of bullish news and a bear market trend. And at some point, those things are going to collide. Not only that, but we have Coinbase that's going to be evolving GDAX to Coinbase Pro.
Yeah.
And there's a lot of speculation on what will entail in that. I don't think, based on what happened with Bitcoin Cash being added to Coinbase, that they're going to take this approach of we're going to release one coin at a time. I think that from an inside trading market manipulation avoidance strategy, it would be most advisable for them to add 10 to 30 tokens all at once inside of Coinbase Pro and open that up. And, you know, they've talked about all of the things that they're upgrading. You know, in a bull market, the announcement of Coinbase Pro alone could have shifted things 5-10%. But in this bear market, you know, it's like you can only sell the news for so long. So I'm right there with you, where there's enough catalysts that I've made mistakes before in bear markets, going into fiat, waiting for the bottom, and then going, oh, this is a trap. Oh, this is a trap, and losing positions. And I just don't want to take that risk. So I'm gonna hodl tight. I'm gonna keep adding more. And as things get momentum, I'll take profits. If one of my coins really runs, I'll take a little bit off the top and I'll throw it into something smaller cap. And that's how I'll circulate things through.
Yeah, and this is the thing. It's such more like of a relaxing way to do things too, I find, is just to hold. You know, like especially the more you research and the more you're seeing all this good news and all these things that are like really beneficial for crypto coming up, it makes me feel at peace knowing that if I just hold, I'm going to be pretty close to on par as profitable as if I spent 4 to 5 hours a day in front of my laptop trying to swing trade and just losing all my hair from stress. You know, I'd rather keep this thick mane as long as I can and go for a bike ride during the day. So,
I never lost more hair on my head than when I was trading crypto.
Except for 2 months ago when you cut like your Samson locks off.
I know. Last time we were doing this, I had a head full. But, you know, I'm right there with you. I just think that, well, it also comes from meeting people in crypto and going to events and realizing that those who had long-term positions on healthy entries, on promising projects, were the ones who had generated the most wealth. I mean, I have very rarely met, I think there's only a handful of people who've generated some of that real, like, astute, life-changing, retire when you're 30s wealth that are sitting there, you know, trying to place micro longs and shorts on 5-minute charts. Like, I just don't see it. I just don't see it, you know?
Yeah, you certainly don't see them on eToro pulling a 200x leverage short.
That's right. That's right. I mean, everyone, you know, I think there's some people who just like to gamble. And if you're one of those people who's got that kind of money and you want to roll the dice, you know, I think unless you're you've gone to school or you've been a master at studying leverage trading, then treat it like walking up to a slot machine, you know?
Pretty much. Yeah. Especially when you're new to the game. It really is quite the gamble because everyone's watching the same chart patterns as you and everyone knows the same game as you. So to try to beat someone who has the same rule book, it's pretty damn tough. And
now you're up against AI. So that's good luck with some of those, you know, like don't think for a second that when AI APIs that are doing logarithmic trading watch your shorts or shorts stack up at 7,300, go, oh, I'm going to go place a long and go place a bid order to pump $3 million, which catalyzes all the other APIs to flood the market with another 50 million, and then all of a sudden you got wrecked because and no person could figure that out, but algorithms can. So that's a hard thing to compete with unless that's the game you're playing.
Yeah, and these like these bots and these algorithms are really like creating a lot of momentum in the market too. Like I don't know what side you're on in terms of like the whole Mt. Gox liquidating the wallet and causing the market crashes. Yeah, I'd love to hear your thoughts on that. Like what you think, like, is the amount that the Mt. Gox trustee that he sold enough to catalyze a crash?
When you kind of look at the fractal metrics of market patterns, there's always these things that are like coincidental, but kind of important or just makes sense, right? Like so we were overdue for a correction. We needed a correction that was a bit more long-term, consolidated. And of course, it just so happens that the Mt. Gox trustee is dumping Bitcoin. I will say this, that I think that the Mt. Gox trustee releasing this much coin into the market diminished some of the scarcity element of Bitcoin that we had before. And I know that you've been really public about Bitcoin's ability to keep up as a currency with some of these other potential performers. I think on the bright side of Bitcoin, it's in many ways it's still far more decentralized than some of its alternatives. And I think that the extended decentralized network, albeit environmentally at times devastating in effect, is critical. So I think what Bitcoin's values are so important that in order for Bitcoin to be overthrown or even to be replaced for what it stands for, it needs to have, whatever that is, needs to have the same quality of values and ethics that is hyper decentralized. I don't think in blockchain, I think in blockchain and cryptocurrency, there's a healthy balance between centralization and decentralization. And I think that certain projects don't need to be as decentralized as the public or the market thinks. I think that there's elements of the projects that should, there's elements that may benefit from some centralization. But for Bitcoin needs to be decentralized because it's a store of value that's international and doesn't need any points of failure. So I think that this Mt. Gox dump has definitely affected the scarcity element because that price propping that was going up in the bull trend, people got scared during that time that they would never be able to own a full Bitcoin. But something psychologically shows up when you see someone dumping 150,000 of them into the market or whatever it is.
Yeah, and like that 150,000, it only takes like that catalyst is really what I feel is that people are saying like, oh, this is only like a 1% fraction of the volume, and I think for sure you're correct. But if somebody market sells 1% of daily volume, you're catalyzing a waterfall instantly, where the bots, the algorithms are going to start jumping on board and crushing the price down, and then everyone else is going to do the same. So is the Mt. Gox selling the cause of the crash? Yeah, like in my opinion, no, but it's for damn sure the catalyst, because everyone just moves on momentum. You have these guys like we're talking about watching the 5-minute candles, trying to make a buck. Yep. And so they're trying to swing trade the thing. So
I think the biggest thing that crypto deals with is the algo traders. So they're investigating market manipulation, and I don't think algorithmic trading is bad, but I think it has a lot to do with price propping and price dumping. And so, like you said, if Mt. Gox clicks sell on 10,000 Bitcoin, all of those algos are going to go short, force pressure, and they're going to liquidate coin. Because why wouldn't you? If the reason why they can jump on it so fast is just because it's a bot doing it. It doesn't have to be a person that goes, oh, look, I saw this thing. And oh, look, we're going to do this thing. So, I mean, I agree that it's a huge I would say that the correction, not necessarily. The extended correction with the bear pressure, definitely.
Mm-hmm. Yeah. Yeah. And so another topic that you touched on a little bit was, like Bitcoin being overthrown or overtaken, and what are the qualities in a coin that you'd have to see for that to be able to happen. And I think that's like, I had this post in the CCI group a couple days ago, like all the different qualities, whether it's decentralization, security, speed of transaction, cost of transaction. And, it opened up a really good conversation. And I think there was like a fairly general consensus that the number one thing for a currency that would have to be the number one, I think the consensus was security. And all the things that come along with that. Verge just had a 51% attack on it.
The third one.
The third one.
The third one in like a month and a half.
So how can you even like hop on board a currency like Verge thinking, yes, this is the one, like, oh yeah, I can totally go to Pornhub with this thing. Like, no.
Right. That's right.
Great.
That's right. Or like, I know. I think my favorite, when it was dumping on the news, someone said, oh, proof people don't pay for porn. It was like, exactly. It's hilarious, but I think you're right. I mean, I'll say this, that the number one disappointment for me so far has been Nano. I thought that Nano was the number one contender for the fiat replacement. And I still think in many ways it is, but I think it needs a lot of help right now, obviously. They're doing a good job of certain adoption, but their marketing efforts, their decentralization efforts need to be clearer, and they have some work to do. Again, like you said, security was valued by the community as number one, and the issue with cryptocurrency is being guilty by association. So for Nano, they were guilty by association because of this big hack on BitGrail, I think it was, and that was a problem, and that makes people feel like the security of Nano was compromised. And while there's been a little bit of a dispute back and forth, I think the lack of clarity of the responsibility and how it's been fleshed out is something that's still pending. So, to have something as secure as Bitcoin, that's as established, the truth is, there's all sorts of things that can cause this bull run to pick back up and for crypto to start skyrocketing. And I'm a very big optimist. I believe that a $10 trillion crypto market in the next 10 years is realistic. Honestly, I really do. I think it's very realistic, especially as securities come on board, which we'll be talking about. But in that way, I think Bitcoin's scalability may get solved in clever ways that we haven't seen. And hopefully that won't create more vulnerabilities. I think Lightning has been something that's been a cause for concern as well as a rally for support. Yeah.
What are your, would you imagine the cause for concern is with Lightning Network? Like, a lot of people know me as someone who's anti-Bitcoin, more so just because their adoption on the tech is a lot slower than the innovation that's currently out there. But, I have to applaud, they're around 40%, I believe, on the Lightning Network now, which is quite a large improvement. And the mempool is exponentially shorter transaction times. So what are your thoughts on the Lightning Network and say like the cons to it?
I think it's great. I think that the issue is that, like it's with anything else, like crypto's scalability challenges are directly as a result of centralized efforts. So, Blockstream has a lot to do with implementing Lightning Network, and Lightning Network as a whole means there's an added layer to Bitcoin, and having any added additional layers to a closed loop cryptographic asset can mean that there's theoretically potential vulnerabilities that could be found within these different layers that are being added. And that's why, the Bitcoin Cash is like, look, we didn't add any layers. We didn't compromise security, but maybe they compromised ethics. So, it's a real bummer too, actually, because I feel like if they would have taken a different position to approach, I think that their product would be a lot more interesting, or the token itself. I call it a product because now it just feels like a company's product.
Well, this is the thing. It's being promoted so hard by one guy, just with the same message over and over and over. And he did an interview with Ivan on Tech not that long ago. And I just was banging my head against the wall. Like Ivan was asking him all these really like interesting and intriguing questions, but it just the same kind of, it was like a political response almost, just like there's
Yeah.
no intellect there. He's just kind of a soapbox guy singing the same song over and over. And that is what it feels like. It's a product that not really anybody is in need of right now, because I don't think it has any like overall benefits over other coins, you know, like it's much more centralized. Like, for example, like why would I choose Bitcoin Cash over Litecoin? I think would be an interesting question for Roger to answer.
Yeah. Well, I mean, and that depends again. What's interesting about crypto is how much our values get invested in this, right? So like for some people, they would rather have some kind of leadership person who's got a huge ownership stake. So they might look at Bitcoin Cash and be like, well, Roger Ver at least still owns his own coin. You know, for other people, they might look at Satoshi Light's decision and go, that was really admirable. And that was a smart thing.
To set the all-time high, it certainly was smart.
Dude, at $340 a Litecoin, are you kidding me? I mean, a brilliant move on his part. I mean, for me, I don't like that leadership decision. That's not within alignment of my values. I don't think that not having ownership of the coin, like from an ethics perspective, at least from my research on leadership, that just doesn't make sense. Like it doesn't do anything for you to say that you're not motivated. Sure, you know what? Now his motivations may be different, but at the same time, he sold at the top. So yeah, okay, you were motivated until the very top to have selfish interest on the success of your coin until you sold the top, and then who knows how he's redistributing those assets into the market to then have a vested interest in other cryptocurrencies. I mean, if he was like, look, I'm going to be a no coiner after I liquidate my Litecoin, but he's not saying that. So if he's going to now have ownership interest in other tokens and not the one that he's in the leadership role of, I don't know that I necessarily agree with that either. And I think that these are all great questions, because when was the last time that a global marketplace of people like you and I were asking such ethical, moral leadership inquiries of the economic tools that we're using? And I think that just the dialogue is great.
It really is, you know, like you compare it to something like where there's like the one figurehead, like you have Vitalik or you have Satoshi, who's like a nameless person or even group of individuals. And like, what is, you know, like if we're going for a distributed, decentralized society, like, is it more beneficial to have no leader and have like group consensus, like a lot of these coins do, which I find like fairly valuable as well? Or is it better to have someone who actually knows what they're doing, make all the decisions? Just like little tongue in cheek, we ran a group portfolio in CCI, and it like just like to see like what is the common consensus, like the common knowledge, how like let's like wisdom of the crowd, let's see what we can do with this portfolio. And long story short, it was just god awful. So
amazing. Well, and that's the thing, right? Like, so for instance, I think you're making a good distinction here. Because some projects, I think Neo is a good example. Solid tech, more centralized. They're now working to decentralize their servers, but what was Neo's core mission? To be blockchain-based business applications, and that's what they're successfully doing. That takes a level of centralization. If Neo was saying, hey, we're just trying to be another decentralized cryptocurrency, but we're going to have some of these centralized efforts, I'd be like, that's misaligned. But if you're saying, hey, we're going to be very involved in creating a blockchain-oriented, certified, globally compliant system that people can utilize to run these applications on, I think that there's some legitimacy. I think that they need to work on decentralization and transparency much more. I think that on like the Ethereum side, I think Vitalik does a really good job balancing the decentralized efforts of Ethereum and the centralized leadership role. It does create points of failure for sure, but you know, I know that there's kind of this Bitcoin maximalist utopian idea around decentralization. But look at the scalability sacrifice we've made there. So
Mhm.
it's a wash. For me, if a year ago, I would have thought Bitcoin was going to get overthrown and all this stuff. And, these days I just want Bitcoin to grow and to enhance. I don't necessarily want it to be overthrown, just because I think its values are a really good golden standard for the industry. And if a more centralized project came around and overthrew Bitcoin, that would just be a little sad, because I feel like some of the foundations that make crypto so exciting would have been liquidated to profit.
Yeah. And I think it's interesting because I think now we're starting to find like a middle ground between, decentralization in more of like a utopian mindset versus like a balance between decentralization and centralization where it applies. When you start having like the key figureheads who are making the decisions, driving the project in a certain direction, like you see with Ethereum, or this slower mechanism of Bitcoin. I think we're really starting to see that, it's not one or the other, just like as it is anything in the world, but it's really
Yeah.
a hybrid that's to be created. And I think that's what we're starting to massage out now, not just with the coins themselves, but also the ways that fundraising are starting to happen. Like Hashgraph didn't even have an ICO. Polymath never had an ICO. They're just doing a lot of privatized funding for small groups of people, because I think, like as is anything in the world, there's a place for everything, and it's not one way is the best way. I think for different projects, different use cases, it's all beneficial. But I think a point you touched on, like transparency, that's the biggest thing. As long as we have transparency and we can see what is happening under the code, under the hood, what decisions are being made, how is this, like if you can see the GitHub, awesome. That's what I'm all for. And that's what I'm the most excited about, I think, with this, and just creating like an easier system for people of the world. Like there's a stat, I think it's 4 billion people of the world are either unbanked or underbanked, which is about over half the population.
So crazy.
It's insane, isn't it? And so to think like, wow, cryptocurrency, like it solves this issue. One of the moderators from the group, of my good buddy, Zach Dash, he went to the conference down in Los Angeles and he met a guy, and the guy was a refugee from Syria. And he's like, I can't use Western Union to send my family money because I don't have a bank account. So I use Bitcoin. And that's the kind of shit that just like gets me going. It makes me super excited about this movement. Yeah.
Well, I share this story, and I might have even told you this story in the summit. So if this is redundant, I apologize. But when we were living in Mexico, on the first and the middle of every month, you walk into the grocery store, and there's like 150 people in line, and they're not in line to buy groceries. They're in line at the ATMs, and it's mind blowing. And you go up to them and say, "What are you guys doing?" At least I inquired, and they said, "We're cashing our paycheck." I was in shock because these ATMs charge crazy. They're unregulated. So, so it's not like the US where there's mandatory fees. They're charging $7, $11 for certain functions. And, for us, maybe that's okay. But for them, maybe they're making $100 a week. So if someone's taking $7, $11 out of your paycheck every time you receive it, that's a huge percentage, and the reason is they don't have banks. They don't have access to banks. So they have to, their whole payroll is being done through ATMs. Like, that's archaic. That's not going to work.
Yeah.
And that's what I said. I recently did a big presentation. I the whole thing for me was crypto mass adoption is predicated on faster, more convenient, easy, simplified solutions for money and financial management. And this is the foundation for what is going to adopt things. When it's cheaper and easier for me to pay with crypto than it is fiat or credit cards, that's just a no-brainer for people, because at the end of the day, the person who sells coffee just wants to sell coffee. They don't care about how they get paid.
Hold on, is this Frappuccino through a decentralized autonomous network?
That's right. So at the end of the day, they've got an iPad on a swivel device that just wants to take in money for the thing that they're there to do. And And I think that that's the reality of it. And you know, Pundis got taken on, and really this is something that we're exploring with Ethos too, because the difficulty of managing cryptocurrency in wallets and maintaining self custody. You know, I think one of the biggest issues with crypto right now is the ease and convenience is results in you not having custody. So using Coinbase is great because it's so easy and convenient. But the fact that you don't actually have custody over your crypto, that doesn't feel good. So, you know, that's why we're like, cool, now we have an app that you can use on your phone. I don't mean to plug this, just trying to speak in the same kind of solutions-oriented mindset, where we can store all that cryptocurrency and have custody. And I think that that's something that's really important for people too, because if people go, oh, I don't need to walk into this branch and be in a line full of people in a facility that I don't. I mean, I usually don't feel good walking into banks. It always feels like everyone's working off of a script, and there's not a lot of authenticity there. The banking services are really skewed. They treat you differently based on how much money you have. And it's not very efficient. So, you know, I think that we'll just see more adoption the better this gets.
And you know, you brought up Ethos, and I think that's like a really fantastic thing to talk about. Is what they're providing essentially is a universal wallet to store all of your cryptocurrency onto it. So you don't need, you know, your Ledger, your MyEther wallet, your like all these different accounts. Because like, for example, not everything fits on the Ledger. So with Ethos,
Right.
it would all be implemented onto a smartphone, and then off it goes from there. And you can like kind of tap to pay more or less then, yeah, at any merchant.
Yeah, that's right. So the merchant services are going to be another layer to it that we're going to be announcing. Initially, it's going to be that you can store. And the thing about Ethos is that we've got a great developer team. The app will be going live very soon. I can't give exact dates. I know a lot of people are curious, but very soon. And it's going to have over 100,000 lines of code in the thing. I mean, there's been a lot of work put into it. The smart key function is amazing, which basically means that you can use a secure private key that only you ever see and have access to that can unlock multiple wallets. So like you said, having I hate the fact that in crypto, the safest solution is for me to put it on a USB drive that's this big.
Yeah.
Lose. Like, that doesn't make sense. Like, there's got to be a better way. So, you know, again, it's an ease and convenience of use space application.
Yeah, awesome points.
So, dude, what about this EOS hack bug thing? Like, what do you think about all that?
Well, I'll tell you what, it is certainly it boggles my mind, because the vulnerability in the smart contract, or sorry, the vulnerability in their code was that by deploying a smart contract, you could essentially take over a node and then rewrite anything into the blockchain to like either you're like now mining all the coins, or you can like essentially you can control the blockchain through this super node. And to me, it's like it blows my mind. It's like, hold on, by creating a smart contract, I can do this? Like that's like, I kind of likened it like, you know, oh, I'm going to go on a vacation. I live in the ghetto. I'm going to leave my like front door unlocked and jewelry right there. It's like a massive invitation.
Or like you book a stay at a resort, and just by being able to check in, you can take over the entire resort.
Exactly. Yeah, it's nuts. It's absolutely nuts. So it's like, it's one of those things where like I raise an eyebrow at it, because I'm like, really? Like that was the vulnerability? That seems like such a simple thing that really should be checked. So, you know, like the mainnet's launching really soon. They're not delaying it. They said the fix has happened, but like it makes me raise questions in myself on, okay, well, what else is vulnerable? Because if that was not taken care of, it seems like there might be a lot of other things. You know, personally, I liquidated my EOS about a month ago, just because well, first of all, buy the rumors, sell the news. So I knew that it was going to be dropping, but also just like things like this happen. So that's where I'm at with it right now. I'm sitting back and just watching the waves come and go as they will. I'm hoping that the mainnet launch goes absolutely fantastically. I hope that it's just a like rock star platform. What are your thoughts on the whole thing?
I don't know if I've met a project that gives me more mixed feelings, honestly. um, you know, I know some high level people that were or have been involved or big believers. There's some people who are in the background of EOS that have such a positive, world changing, heart centered mentality,
Mm-hmm.
and
Which
there's
is
a
their
lot of
logo. It's like the
more.
Sacred Heart is their logo.
Exactly. And like there's some really incredible like philanthropic or like kind of win-win world mentality going into many of the projects. And like in a way that's what we've all been at least in my world, or for me, that's something that I've been really desiring, is like a win-win economic infrastructure in this whole system. And then some of the fundamentals worry me. The fact that this got released by a Chinese data hacking company, security company, is odd. Like it had to come from China. That's weird to me. I don't know if you know this, but earlier in the day, yesterday, Dan Larimar had posted on Twitter about doing a bug bounty for EOS, and said, and that was yesterday, earlier in the day, and he said they're offering 10K a bug. Well, one, hopefully they're paying that Chinese company for the bugs. Two, that's not actually how you run an appropriate bug bounty for a platform this large. So there should be tiers based on severities of bugs. There should be an entire campaign, and that campaign should be managed properly. There should be contacts, there should be training, there should be feedback. There has to be an entire systems engineering report system, and there needs to be third-party auditors that are involved that get into and dissect everything, especially when you've now raised almost $4 billion in your ICO. So 10K a bug post on Twitter 7 days before paying that. I don't even know how to make sense of that. So I think one of the other, so at its core, I think it represents something that's very interesting. I am a little bit concerned about the idea that anyone who's deploying high traffic systems on EOS are required to hold large amounts of tokens. And I think that and this is actually out of pure naivete. Like, I just don't know from an economic standpoint how well it's going to work, and so like, that's something, it may work really well. I just don't know. It's never been done before. So I don't know if anyone really knows, but like, that's kind of the whole model, the structure. I will say that like, it's revolutionary. Like the ideas that they came up and how to create this network is mind-boggling. I mean, I think it's just engineering ingenuity at its finest. But maybe, is it too much? We'll see. Did they stretch too far? We'll see. Also, the thing that was concerning me is that I saw that most of the top block producer candidates were exchanges. So what? No. No, there should never be an exchange. The access to liquidity, the fallibility mechanism of all of crypto, be the thing that's managing your block production. Because then, if there's only 8 primary block producers, I think it is, if I might be saying corrected, and 2 or 3 of them are exchanges, well, what happens if that exchange gets hacked? How does that affect EOS and the community as a whole? So, that things like this. I also think that even the token swap, lack of transparency, lack of communication. I can only imagine what the team is going on. But with this kind of raise, I would have loved to see this handled a lot better.
This is the thing, like some projects I feel like do some things just fantastically. Like we look at Nano and transaction speed, and like Feeless, it's like fantastic. But then another side is just terrible. And we're looking at EOS now, and like the plan they've created, I mean, we haven't seen it implemented yet. It's fantastic. It's phenomenal. But then, you have like, you launch a bug bounty 7 days before your main net launch on a $4 billion project, like you say, in a super amateurish way. You just shake your head and you think, what is going on here? And I couldn't agree more. It's like these teams, seem to be very specialized in certain areas, but not very well-rounded. And I think that like kind of opens the question on like, you know, what if we just got all these guys' brains together on one project? Like, what could we create? But I think they're all just such creative guys, honestly, that even myself personally, like I love to take my idea and just run with it. And like if people want to jump on board, awesome. But otherwise, it's kind of like, like I have a vision, and I think this is what they're doing is they have a vision and a select area of skills. So yeah, like you say, I'm also excited for EOS, but yeah, not letting people. I think it's about 50% of tokens, EOS tokens, still aren't registered. And so you're talking about like unknown economics. There's some unknown economics for you, because that is going to like what even happens. I'm not sure actually. Like let's say then
sorry, I didn't mean to cut you off. I was inquiring about that. I had recently got an answer.
Okay, yeah, I'd love to hear.
So basically, they said that Block One is going to have a post-swap registry system for a long period of time that will allow tokens that aren't registered in official swap have some kind of smart contract processing that will allow them to send in the tokens and burn off the old ERC20s and redistribute the fresh tokens. Again, that's I don't know how all that's going to be managed. The clarity that I got in the responses seemed a bit like, oh, but they got it. I'm like, yeah, but how? Because if all of a sudden, you know, that system is just going to have to be really secure, because best believe there's going to be 1,000 bot websites saying, hey, did you not register your EOS? Send them here.
Oh my God. Yeah.
We'll burn them for you.
Yeah, we'll really burn them.
You know, it's a lot of questions. So I appreciate it for all the unknowns.
Yeah.
But I'm excited about it.
Yeah, let's say the EOS, the mainnet goes off it's without a hitch. You know, it's everything and more that you've dreamed of, that we've all anticipated. You know, that's what's been projected. What then happens to a platform, say like Ethereum, which, you know, by a technical standard might be a little bit inferior? What would you say how would that affect Ethereum, and what could we expect to be seeing?
Yeah. So a couple things. I mean, one, we're going to see what an ambitious staking mechanism does to the actual economics of the performance, right? So like for Ethereum, yeah, it might be a bit slower, and these applications may not be able to operate that much faster. However, the proof of work mechanism entails that these tokens don't have to just store tons of Ethereum in order to power their decentralized applications. So I think that there's a wash there where there's a value in the marketplace for both. And I think that Ethereum's the level at which I think its inflation mechanism is a lot more humble. So I think that that's also something to look at, because the question is there really going to be scarcity driven for all of these EOS tokens? Because, you know, their relationship to Bitfinex, to me, feels like there's some really deep API price propping going on with EOS. And I don't have proof of that. It's just speculation. But like even on the news yesterday, I feel like the lack of the intensity of the dump was due to price propping. And I have no basis for that. It's just because I literally don't believe me. Like, don't buy that message. It's just, I've seen the price propping that goes on Bitfinex, and I've seen they have some incredible APIs to do it. I think that they've literally came in as white knights to save the market at times, but like, let's just be honest, they've played it from all directions. So they'll short it, and they'll go long all day with those APIs, and EOS is a prize child to that network.
Yeah, definitely. Yeah, Bitfinex has their hands in all kinds of sticky pots, it seems. And EOS especially now too, you know, with like the massive amounts of ether that they have. I think how many ether do they have to send off right now? I forget the exact number, but it's like
I don't know, but they started liquidating it a week ago.
They did, yeah. And you know, like you want to talk about price manipulation and being able to prop your own platform on a pedestal, like you liquidate that Ethereum and that thing's just going to drop through the floor. And if your mainnet goes off without a hitch and EOS is doing fine and gravy while Ethereum is dropping, you know, that's a lot of power to redistribute to EOS. And I think there's a,
Well, yeah, because then they have the issue of like, cool, we dump all of our Ethereum and we buy back all of our own tokens.
yeah, right. That is a possibility, isn't it? It's just, I love the BS speculation on this kind of thing.
I know
Nobody,
it's bullshit right now, but I love it.
no one has any idea. It's the whales, they're out to get us, and the Rothschilds that made Bitcoin. It's like, oh my God. I think half the time, a lot of these, like conspiracy theories are like, I'm a fan of conspiracy theories in like the real world. Not that crypto isn't the real world, but I think a lot of them, just because there's like so much emotional attachment to the money that's being won and lost, so much stuff is fabricated, like, is it whales pulling up and down every 5-minute candle? I really don't think so, honestly. Like, if I'm a whale, for example, we're talking about like time and energy. Like, these guys are like masters of their time and energy, and I want to play the big swings. Like, I'm going to sell it once when it's around in between 15 and 20,000. And I'm going to buy it back right around the range of like 5 to 7. And that's all I'm going to do. I'm not going to try to sit there and like, penny pinch it, because you get bit as a whale on the wrong side of the trade. That's not your profession. You're like, you've made your money doing something else. So swing trading it's not your game. But I mean, that's another conversation. That's just
I think there's a handful of old school Bitcoin whales that have been swing trading BTC for a very, very long time, and they scooped up a lot of Ethereum, and they've literally been in it doing this for like 6 years, accumulating, and I think they still do that. But I think a lot of the irrational price action we see is propping that goes on with competitive APIs. And I think it's much less malicious and Illuminati darkroom as it is just competitive mathematics trying to, one up each other in a hyper volatile space. And that's why I speak a lot to that, because I don't think it's as much darkroom as people think. I think it's a lot more math as people think. And, I guess the question that we have to look at, to answer your previous question, I think EOS is going to serve its own market. I think that there's enough decentralized applications that are coming into the market. I think that it's going to be really interesting to see. There's also more competition than ever for smart contract platforms. And I think EOS is a little bit confusing because it sounds like it's an operating system, but it actually is not. So, I think that that's also a bit confusing. It's a network. And so I think people were looking at it as a new decentralized internet-based operating system. And that's not, from my understanding, I might be wrong about this. And if so, shoot me a message, but I just don't see it as that. I see it as a decentralized application network with smart contract gateways and really clever ways to have high performance of applications on a decentralized web infrastructure. I think there's still a lot of room for the operating system element of it. I think that's why Elastos particularly is really exciting. It's probably one of my favorite tokens in the space. Overall, I think that as market starts to grow, we're going to see some volatility calm down a little bit. I might be wrong about that, but
it might take a while, but over time for sure.
Yeah, it might take a long time.
Yeah. And I think you nailed it, like all these platforms, they're not necessarily in direct competition with each other. They, in a way, like they are taking from each other's market cap in a little way, but I really feel that they're complementary in the way that different applications on your iPhone today are complementary. They serve different purposes, unique functions, and there is a lot of room in our ecosystem for them. Some people prefer iPhones, some people prefer Samsungs. They like the Samsung because you can customize things more. Some people like iPhone because it's simple, it's user-friendly. And so I really think this is what we're going to see with smart contract providers, with decentralized applications. There's just going to be like, it's absolutely insane how many new projects are coming out today. And I really don't think it's going to be one payment coin. It's not going to be one this, one that. Like, how many years would we be away from like one global cryptocurrency? Man, that's like, 15 plus, if that were to ever happen. But I really don't.
I just never see it. Like, people don't like it. Like, when was the last time you went to the store and they gave you one option on the shelf? I think that human psychology dictates that variety and quality and the ability to scale outperform anything else. And, I think we'll see that. I think that Cardano is going to be used for a lot more like institutional research kind of projects. I think it's going to have some interesting applications. I think we'll also see a lot of interoperability. Like going back to Elastos, it's an operating system that literally leverages some of the security features of Bitcoin in its hash function, which is like insanity. Like they literally leverage Bitcoin to run an operating system for security. I think that those kinds of things are really interesting. Like what if you use the security of an Ethereum network and the scalability of an EOS network? You know, now we're really talking, because you have the different layers of your application where necessary, operate on the different layers, and how this comes together to create this new fully decentralized internet destination that we experience, and can at some point have the performance to run VR and all these advanced things. I mean, I think that that's what's really interesting too, is the fact that so much of the like proof, I don't think like eliminating proof of work is entirely ideal, because I love the fact that one, there's security, but two, I love that visual graphics cards are being used for so many of these networks, because that's really pushing the rendering component of humanity forward, right. Which means that virtual interfaces and the internet becoming an experiential location, or something that we can kind of port into and fully navigate. Of course, there's a lot of risks and issues with that, but I think that it opens up the gateway for that, where, you know, other than gaming, we didn't really have something pushing that forward to its full potential.
Definitely. Yeah, I fully agree with that. And even like now we have like cloud computing, like, you know, you look at Gollum, where it's like amalgamating all that too, which is like a really, like, to me, it's super cool, honestly.
Yeah,
and,
it really is.
I just love it. And like you say, like we're pushing the boundary on these like rendering things. And like now the ability that we're going to have, not just gaming, like, you know, rocking Fortnite on your PC, but to be able to like run complex scientific programs where you're like restructuring DNA in a virtual reality world. It's going to be fast, seamless, and you'll be able to like do it across the world with somebody else. And I think, yeah, it's interesting to say the least how sticking with proof of work increases the global ability on rendering. Everything is such a butterfly effect, and I find it very, very intriguing. And just, you know, this movement, large movement towards decentralization and transparency in cryptocurrency, I feel is just a really nice butterfly effect and metaphor for other things that are going to be happening in our world too. You know, like, okay, the people want transparency, they want decentralization. Like, how can we give this to them? You know, if, for example, if a politician ran with a foundation of we're putting everything on blockchain, or like all of our spending is going to be transparent, I wouldn't even care what his other like stances were, to an extent. I'd be like, that guy has my vote. You know, like that's the biggest thing with politics, is we elect people who don't even tell us what they're doing when we give them the vote. And that blows my mind. So I really think I'm excited. You know, you have colonies popping up now too. Like you have them building one in Puerto Rico, there's an island that they're making now. Like, I think they're running an ICO for an entire island of like 500.
Oh my God, really?
Yeah, yeah. I forget what it's called. Yeah.
Oh man, that's gonna be fairly bohemian.
Yeah.
You know, I love that. I mean, and I'll say this. I feel like with many cryptocurrency companies, they're using decentralization still to hide behind how transparent they could be. And I think that this is an issue. I think that and me stepping into Ethos, I'm really going to work on seeing if we can create more of a standard in this way. But I think that companies, we need just new systems to be able to have greater transparency. And ironically, you know, there's campaigns right now where politicians are trying to get the legal clearance to be able to accept campaign fundraising via crypto. But at the same time, they're not willing to show where those funds are going to go. And I'm like, don't give me another way to put money in your fucking pocket and then not tell me how you're going to spend it. Like, that's just not cool. Like, don't leverage this new economy for your own, you know, lack of transparent greed. I'm not into it.
Yeah, they're really shooting themselves in the foot on that one. Hey, like, it's like these people who have these one set of values, and then they totally go against it once you give them a gift. And I don't know, but for me, like if I give somebody a gift and then they just totally turn it into something else, so that doesn't give me the warm fuzzies.
Yeah, no kidding.
Yeah.
So, I've got just a little bit more time here. Why don't we touch on security tokens? And
I would love to. Yeah.
yeah, let's talk about this.
I got the shirt to match today, so rock and roll.
The first thing I said, so everyone watching, is I was so jelly of this polymath shirt when it's not literally, but just like loving it, because of course on today this would be the shirt you're wearing.
Yeah, she's a cozy one. But yeah, security tokens, I think, you mentioned earlier, like you're thinking in a few years or X number of years, like a $10 trillion market cap for cryptocurrency isn't that crazy. And, I really feel that security tokens are going to be something that propels us towards that 10 trillion and beyond mark. Like just global real estate is like 200 trillion by itself. And I understand not everything's going on, all real estate's going on to blockchain, but it's always that, oh, if we capture X amount of the market, then we'll be worth this much. And maybe I don't subscribe to that, but there is such a massive market out there that is looking for two things: cheaper, faster, and I guess with the addition of 24/7 and like liquidity.
Right. That's true. Yeah, you said something that I think is really important, man. Like a big distinction, especially with security tokens. I think people think that like it's going to be like the next smart contract platform boom bubble that we just had, and I think there's an extent that that's true. But I think what's most interesting about security tokens is it's the migration of already existing assets of value now becoming available to be managed, mitigated, and exchanged inside of the cryptocurrency market. So I think that we could see, like real estate, for example, there could be $100 million in real estate assets that migrate into crypto. That doesn't necessarily mean that a coin was started and now it went up $100 million. It means that there was assets that were migrated that had that value. The reason that that's interesting is that opens up the liquidity network of cryptocurrency to all of these other financial instruments and assets that if I could sell part of my home to then grab some tokens of a project, that's really compelling. And the truth for most securities and derivatives is that there's so little functional, modern, up-to-speed tools to manage them. It's very archaic. Most of it's paper pushing. Most of it's documents and safe deposit boxes and centralized banking institutions. I mean, it's crazy. It's paperwork and people's safes in their home that they hope are fireproof. This is not going to work. So, I think that to not deflate the hype, but to help people understand that what's most exciting about this is the ability to migrate these assets. And there's going to be a lot of utilization of blockchain to manage these assets, I think, that will never hit the market. So I think for people to think, any security or asset that's blockchain based will hit the market, not really, because if the blockchain is just helpful for them, they don't necessarily need that. But I think for many different use cases, it's going to move in because having the liquidity transfer built in to every other element of the certification and authenticity, all that is critical.
Yeah. Like the two things we're touching on like quite a lot is like the liquidity, and a big thing that, it seems like is the easiest one to understand is the real estate market for a lot of people. And it just makes so much sense. Like Zach Dash just posted in the comments here, like liquidity accounts for 20 to 30% of a sale price. So if you equate that to a house, you're selling your, like, let's say a $500,000 house, that's a large sum of money that you are essentially giving away because you're only selling to a local market, which is your community. But if you are able to subdivide ownership of that house and put it on a 24/7 network that has like pretty much instant transactions and zero fees, well, now you've just earned yourself an additional 20 to 30, or at least the price that it's valued at, because you're not trying to drop your price 50 grand every month, waiting for the buyer, sitting for a month at a time, but you're able to actually like sell micro pieces. There's a really cool platform that I got to, shake hands with at one of the conferences there. And this is what they're doing. They're subdividing real estate, and then like us as a group of owners would earn a percentage on the rental fee on Airbnb. And then as the value of the as a dividend, and then as the value of the property increases, as does the value of your token. And so I just think, wow, this is very cool, and how limitless it can become. We're starting to look at more and more of a less ownership society. You have Uber, where you're just renting the cars for time, or Turo, or Netflix. You don't own your movies. You don't own your music. Nobody's owning anything. And I think this is the direction that we're going to start seeing real estate take with blockchain and security tokens, is micronized ownerships where you can like live at different houses. And maybe that's not everybody's lifestyle, but I'd be certainly keen on like 1 week in Bali, 1 week in Nicaragua, 1 week in Guatemala type thing. So
yeah, I mean, it's exciting. There's so many digital nomads. And once blockchain puts a lot of these shitty jobs people don't want really anyways out of business, they're going to want to get out there and experience the world a little bit. I know for me, in the hyperinflated market, that I think is also overdue for a correction. I'm not looking to purchase. I'm looking to rent. And so I live a little bit more of a digital nomadic lifestyle right now. So I resonate with this. Have you seen the money visual capitalist world's money markets visualization with all of the little blocks that shows all the sizes of the markets?
I've seen a few of them. There's quite a few different ones though, isn't there? Oh, you can screen share, hey?
Oh yeah, I can. Yeah. Let me do it.
Okay.
Yeah, let me do it. I've got like tabs open. So
as you're rocking that, I'll harp on something that I heard Vitalik say in an interview lately. The one guy was like, "So Vitalik, I hear like, what do you think about you being a job killer? Like you're going to eliminate a lot of jobs with this new efficiency." And he says to the guy who's interviewing him, he says, "I'm going to kill a lot of jobs, but I'm going to create a lot of better ones." So that's what I really like, like,
me too.
All right, here comes the screen.
Yeah. Because like who the hell wants to be a paper pusher? Okay. So comparing the world's money markets, this chart, and have you seen this one? I'll still show the group, but have you seen this one?
I don't think I've seen this one.
Okay. So each square represents 100 billion.
Yeah.
This chart was done when the market was approximately like 180 billion. So it's approximately 180 billion. These are the biggest companies in the world by standard, right? So Apple, Alphabet, which is Google, Facebook, and this is their valuation. Of course, that's 100 billion, 2, 3, 4, 5, 6, 7. So, Alphabet being valued at about $700 billion. Here's all of the 50 richest people at a glance. Mm-hmm. We know that they own more than, 3.6 billion. GDP, Fed balance, you guys can get the idea. This is all of the currency in circulation in the world. So again, you can see that, all of the cryptocurrency market is just about one of these blocks, even though it's international, it's 24/7. Here's all of the gold from jewelry, private investment, central banks. Here's the stock market. So I think that there's a reality too. And I don't know how exactly this will affect the cryptocurrency market, but stocks are traded in such an inefficient manner.
Yes.
It takes 3 days to clear a buy or sell, which is just like, like the fact that it's 3 days and there's a closing. That's not going to work for global markets.
And like now with cryptocurrency, 24/7, you hit sell, and then within a second of that sell, go to the store, swipe your phone, boom, make a purchase. So it's like it's such a no-brainer, the efficiency that's coming up. But anyways, that's just a jump in.
Dude, you're so right. You're so right. That's the thing, is that crypto is just better. It's easier. It's better. So at some point, the stock market's going to have to scratch its head and say, does the stock market become blockchain based, or does the stock market start to have some branches in the crypto market so that we have access to enhanced liquidity and speed? So this is the entire global money supply. So quite a bit here. Obviously, how big is the total value of the world's accessible money is easily 36.8 trillion. This is the broad money coming in about 100 trillion. So I think that when people look at the crypto market as a whole, we think, oh, 10 trillion, that's 1/9 of the broad money in the entire world. There's no chance it's going to happen. Well, crypto is not just broad money. It's not just a fiat alternative.
Mm-hmm.
It's also taking into account all of these stocks and bonds and assets.
Mm-hmm.
It's not just a store of value. Here's the global debt. I mean,
how long are you gonna have to scroll?
Pretty far.
Oh man.
Not as much big, but 215. Obviously, we have more than double the debt than we do the money in supply. Here's the real estate market, as we were talking about.
Yeah.
So look at huge assets, enormous. We have more value in real estate than we do in actual cash or gold by far. And then here's the derivatives. Oh my God, look at this, 544 trillion in most of these derivatives, future contracts, forward contracts, options, warrants, swaps, indexes, identities. Most of these derivatives have been formulated over the last couple hundred years. So this isn't something that is new. It's very old. That's why there's so much value in these derivatives. But you have to remember that they're assigned to trustees that are starting to die and lawyers who are dinosaurs. There needs to be look how big this derivatives market is. This derivatives market to date does not have any proper management system that's high functioning for a modern marketplace. The high estimate for all derivatives is $1.2 quadrillion. So that's a lot of cheese. On the low end, it's 544 trillion. So if you're saying that cryptocurrency and blockchain can help us manage stocks, store of value, fiat replacement, derivatives, bonds, indexes, contracts, insurance, and if this is all going to actually be accessible to an independent marketplace where, why not be able to buy packages of insurance? So say why if say there's a blockchain cryptocurrency insurance company, does Geico really need all of these buildings and all of these floors and all of these storefronts and all this expensive overhead? What if I'm willing to make a bet? I bet that if I put $10 million into insuring people, based on our equation of our decentralized insurance procedure, that only $4 million of those dollars will actually be pooled out into accidents and medical bills and the things that go to it. Well, if I'm willing to wager that bet, why do I need all of this middleman? So if you look at this entire use case scenario, look at these huge. This is why I think that the cryptocurrency market can reach 10 million or 10 trillion on a low end, because we're not just looking at one asset class. We're looking at a multitude of asset classes being able to be migrated in a simplified manner. Yeah. So something else I just want to share here real quick. And then, this is an image that, let me see.
Well, while you're doing that, I want to jump in and say, the chart that you've shown too is of currently existing asset classes and derivatives and all this kind of thing. And as new companies come in and, we're our world is just proliferating more and more money out of every crevice by the second. So it's we're going to be able to tokenize all of these new companies as tokens that you can then make an investment or, a return on. Because currently right now, if you have a company, to tokenize it, there's a lot of regulations, and being a utility token does not cut it. You have to be fully compliant. So having security tokens puts you in line with at least, the SEC. And there's going to be more to roll out with different governments and things like that. But it's a step in the direction of tokenizing companies as well. And that's massive.
Yeah, huge, right? Because IPOs and the way that IPOs are managed are extremely stressful for companies. And, the way that it works is just kind of screwy. So, we're already seeing the IPO market start to die down as the ICO market, and soon the STO, the securitized tokenized offerings hit the market. So yeah, I think that's absolutely, thinking about the largest companies in the world didn't exist 25 years ago. Who knows what's going to be born, like you're saying, in the world to come. And I think that there's a good chance they'll be tokenized. So, speaking of polymath, they just released a guide on how to create your own security token, and it's like so practical and simple, and it's like it's almost scary how much they're going to automate this and how fast this is going to get onboarded. But look at these blockchain applications. I mean, it's huge. This is just a great infographic. I mean, energy, education, donations. In fact, donations and philanthropy is something I'm really excited about, because it's now been proven that people don't treat tokenized assets the same way they do as dollars or fiat. In fact, they treat it much more like points in a game.
Yeah.
So there's a much greater realm of generosity potential here that hasn't existed before. So cybersecurity, credit history, cloud storage, charity. I mean, there was a great story of one of the top streamers in the world playing Fortnite is Ninja. I love to watch him sometimes, even though I'm not that big of a gamer. And there was a school in Africa that was going to get closed because it didn't have a wall enclosure to protect the school. And so it needed $5,000. And his friend had told him about it because he was involved in the project, didn't heard about it. And he goes, well, in Fortnite, I build forts. This is technically me building a fort for a community in Africa. So he's like, this feels right up my alley. And in 1 hour, they raised the money and the wall's already built. I mean, it's just incredible. $5,000 in an hour, done. He's already raised $250,000 in the last 2 weeks for charity. It's a different kind of economy. And, I think we can look at the gaming world as a great example of kind of the movement and circulation between people of the donations and the contributions. So just travel, real estate, music streaming, medical, healthcare. Now, not all of these industries having blockchain as a solution, like I said, will hit the market, but enough will to make a huge impact. So, that's that.
I think a huge thing is like every single one of those points on there, has an application in the blockchain realm, and it can add huge value. Now, whether it takes 1 year, 5 years, 10 years, 20 years, or never at all for them to actually start rolling with it because it's efficient or compliant or whatever, that's another story. But, every little bullet on there, I was reading through, I'm like, I can imagine like a use case for every single one of those on like how it can get faster, more cost efficient, more transparent, or more like autonomously regulated. So I think it's just.
I heard something the other day that was like, oh shit, that consensus algorithms essentially mean that there can't be two transactions happening at the same time in the same place, which is like the double spend thing.
Mm-hmm.
And but that's almost the exact same kind of technology that goes into there can't be two cars in the same place, otherwise they crash. I was like, oh yeah. That makes perfect sense. If you can't have two transactions in the same time and space, and you can't have two cars, either one will crash. So these algorithms, man, so much that can be done. Jeff, man, we just jammed so well. I'm enjoying this a lot.
I super enjoy it. Yeah, it's been fantastic. Yeah, like I so enjoy chatting with you. I feel like we had like 2 talking points, and it flows really nicely. It's a lot of fun.
Mm-hmm. Yeah, I had to start wrapping up soon here.
Sure.
Maybe in a future broadcast we can talk about stable coins, because I feel like that was one that we didn't get to hit on, and I was excited. I think it's a big unknown right now. I think that for me, I just want to see if just in short, to just touch on that.
Yeah.
I really want to see if stable coins can use physics and mathematics alone to create stable currencies that don't have to be tied to a dollar or a physical asset. Like True USD, which just came out, the entire other side of the company is about having crypto assets connected to real world assets from a financial fiduciary mechanism. That's okay. That's cool. But I want to see the math. Like I want to see this just from a physics, cosmic, whatever perspective, where we can create stable, non-hyperinflationary currencies.
Yeah, and I fully agree. To summarize in short, like unless we're having like a broad array of things that we're pegging to, like to peg it to just the USD or just the gold standard or just that or physical assets, in my mind, it's not really completing the purpose that we've intended. Like if you look at Satoshi's vision, which is like get away from that system. And so using math, using larger scale measurables, I guess you could say, is really where I think the value of the stable coins are going to go. And which one is it going to be? I don't know. But I think what I'd be super excited to see is exactly what you're saying, having it not tied to something like the US dollar, the euro, or gold.
Yeah.
Yeah.
Yeah. Same. Well, I know, can I make a little announcement that we'll be doing another one of these with Ethos? Is that okay to make the little plug?
Plug it on in. Yeah, I'm excited for it.
Yeah. Okay. So just so everyone tuning in, watching, we'll be doing another one of these jams per Jeff's kind heart and generosity with Ethos. So as he mentioned, if for those who did catch it, for those who didn't, I'm the lead marketing director at Ethos, and we are on the horizon of releasing our universal wallet application. And we're going to do a broadcast with the founder of Ethos, Shingo Levine, who's just one of these young guys who's just so smart and very just ingenious, and he's such a smart guy. And we're going to get into the nitty gritty. I know you got some questions about security and kind of user interface. How will it all work? Those questions are really well suited for him. So we're going to be doing that broadcast on June 13th at 1 p.m. Pacific.
Right on. Yep. I don't usually like to lock things in, but I'm excited to lock that one in. I think that'll be a really nice conversation. I feel like, on all the things we talked about, like Ethos is just providing a really nice solution to bringing everything into the palm of your hand, simplicity, ease of use, user-friendly. And I think that's what they're excelling at right now. So I definitely have some questions, and I'm excited to riff with you too about more.
Yeah, bring them on. If any of the community has questions too, whether they're easy, intuitive, or tough, bring it on. That's what it's for. We really those questions matter to us so much. So we're excited to do that. And thank you, Jeff. Thanks for today. This has been a blast, dude.
Right on. Yeah, thanks so much for coming on, Amateo. Super appreciate it. As always, an awesome time.
Thank you, and I'll see you in the next one.